Right. Okay, well, we're just going to get started. Welcome and thank you for joining VEF this sunny afternoon for our online forum. My name is Kookai. I am the co-chair and board member at VEF, and I am so thrilled today to be the MC for today's event. We've got a jam-packed afternoon with amazing lineup of speakers, panelists, and a special section in the end just for today's event on the reverse pitch roundtables. Right. So I'd like to first acknowledge that VEF is grateful to be located and streaming to you from the traditional, ancestral, and unceded territory of the Musqueam, Squamish, and Tsleil-Waututh nations. I also like to acknowledge the unceded territories from where you are watching today as well. So a little bit about VEF. I'm going to be short because a special section is coming up. VEF is a nonprofit society in Vancouver's premier networking forum for technology entrepreneurs. VEF was actually founded in 1988, and we've been bringing people together, entrepreneurs and investors alike, ever since. We host 8 events per calendar year, kicking off our season in September. VEF wouldn't be possible without the contributions from our dedicated board members. Thank you to all of our board members who are committed to help advance Vancouver's tech ecosystem. Thank you to our season presenting sponsor, TELUS Ventures, and to all of our sponsors and supporters who have helped VEF host these events: CIBC, Corporate Recruiters, Douglas College, Fasken Silicon Valley Bank, Entrepreneurship at UBC, Vanish Capital, and our media sponsor, Vancouver Tech Journal. VEF is working with New Ventures BC to deliver our online events. New Ventures BC is also a part of the BC Tech community, offering its annual startup competition and accelerator programs. The second annual competition will open for entries in March, win for $250,000 in cash and prizes. So thank you to New Ventures BC for helping us deliver the amazing events here. A reminder for our guests today to keep the conversation going on our social media, share some love. Today's agenda, here's how today's event is going to run. I'll first introduce the lightning pitches, then we'll have a panel discussion, Q&A, followed by a new segment, the reverse pitch roundtables. More on those coming later. So please stay tuned until the end of the event. Grab some beverages, some snacks, because we're going to have a great conversation today. First off, the VEF kicks off each event with lightning pitches. It's 100-second pitches from promising startups. We have 5 pitches today, and I'm going to do something I've never done before. So I'm going to put on my alarm, which you will hear at the 100-second mark. That's also my morning alarm as well. First up, I'd like to introduce you to our first lightning pitch. MKL Foods is Yissi here in the room. I will stop sharing my screen. All right, is Yissi in the room? Calling one more time.
Yes.
Oh, amazing. All right, so whenever you start, I will just hit that, timer.
Awesome. Can you see my screen?
Yes, it's not full screen though, so you can make it full screen.
Okay.
Let's see.
Awesome.
Okay, perfect.
Yes, good afternoon, everyone. Thank you so much for giving us a platform to share our story. My name is Aisi. I am the founder of MKL Food, a startup cocoa beans processing company and single source origin chocolate ingredient supplier. I grew up around cacao farms, and I come from the 3rd generation of cacao farmers. I hold a bachelor degree in marketing and different designation in the chocolate industry, maître chocolatier. MKL Food is located in Mission. We have chosen the district because it is the heart of the Fraser Valley, and because the district was very supportive of the venture. Growing up around cacao farms, I had a lot of issues related to poverty, miseducation, and deforestation. This is why with MKL Foods, we are trying to fairly engage the small cocoa farmers. We are trying to open new trading opportunities and, of course, paying them fairly. MKL Food is also creating more inclusive job opportunities for women. as well as supporting, empowering women's involvement in manufacturing in Canada. And our business model is so unique that we capture up to 80% on the supply chain because we grow, we import, export, we manufacture locally, and soon we're going to be distributing. We offer traceability on a QR code because we want to make sure that our customers know the name of the farmers. And all of that was possible because of my incredible six. I've surrounded myself by smarter people than me to support me with my marketing, sales, and more things. And people love our products, both retailers and consumers. And thank you so much for having us today.
That was literally on time. Thank you. All right, so next up, Easy, if you could stop sharing your screen, I'm just going to call the next presenter, Mesentel Therapeutics. Dr. Michael?
You can hear me, right? Okay.
Yes, I can hear you.
Share screen. Go. Everybody's look good?
Yes.
Okay.
Awesome.
Excellent. Thank you. Good afternoon. It is a pleasure to be here, and thanks for the invitation to present. My name is Michael Underhill, and I'm the CEO of Mesentel Therapeutics, a Vancouver-based biotechnology company recently spun out from the University of British Columbia. At Mesentel, we are using sophisticated tools to create superior therapeutics. What does this mean, and why should you care? Did you know that one of the most promising new cancer therapeutics, called immunotherapy, is curative in only about 15 to 20% of certain cancer types? This means that these therapeutics don't work at all for the large majority of cancer patients. Large efforts are underway to understand why, but unfortunately, there's been limited progress. This is why what we're doing at Mesentel is transformative. Capitalizing on 30 years of research, the team at Mesentel has developed new and exciting therapeutic strategies to make these curative agents more effective and powerful, both in rare and more common cancers, many of which prey on children. At this stage, we are seeking a pre-seed round and welcome your participation on this journey to improve the lives of cancer patients. I look forward to discussing this exciting opportunity with you. Please find my contact information at the bottom of this slide, and I thank you for your attention.
Awesome, thank you so much. I should have mentioned as well, please feel free to drop in your information on the chat box. Presenters, also anyone who's participating here as well, would be great for all of us to connect afterwards. Next up, I'd like to invite Helen from Running Order.
All right. You can see my screen? Sorry, default question. All right. Hi, I'm Helen Wu. I'm the founder and design director of Running Order. Running Order is an ultra premium technical activewear for sport and life, sitting between global running and electronic music scenes. Running Order designs for a spectrum of bodies and gender. It is also a worldwide running club with braces based in Berlin, New York, London, Vancouver, Antwerp, and Taipei. Completing our world, we're also a collective of internationally worldwide renowned DJs, artists, and creatives. From a product perspective, as a clothing brand, we are fully sustainable. All our materials are either recycled, bio-based, and locally sourced. We are manufactured by some of the premier production companies in the world that produce for On Running, Arc'teryx, and a few boutique designer brands as well. The opportunity within the market, a new designer market is emerging over the past few years, heavily driven by satisfying designer sport collaborations. With a renewed interest in outdoor and sport, personal health and wellness, and social activities changed by COVID-19, fashion-conscious core audience and fitness enthusiasts alike are searching for a more emotional identity-driven apparel brand. What's extremely noted in the enormous sport and activewear market is it's a $39.5 billion market within women's space specifically, for growth and opportunity, because in mainstream design, women's design is primarily launched within a gender binary of shrink it and pink it, and we're looking to change that. Our team consists of several people besides me. So we have marketing strategy, art director, and production. We have on standby sales showroom that represents some of the premier designer brands within the fashion market. Thank you. That's it.
Awesome. I was just gonna say no one hits the alarm. Sorry, I did skip New Peak Robotics. So New Peak Robotics, are you around?
Yes, I'm here. Let me share my screen. Does this
Perfect.
look good?
Yes, looks great.
Okay, awesome. Hi, everyone. I'm Anshul, CEO at New Peak Robotics. And today, agriculture is going through an existential crisis. Even with rising minimum wages, over 70% of farmers today cannot find enough people to work on their fields. And this problem is especially bad for strawberries because they're one of the most labor-intensive fruits you can pick. Just last year, over $3 billion were spent to pay human workers to pick every single strawberry that you bought at a store. We are solving this problem of chronic labor shortage by deploying our fleet of fully autonomous robotic harvesters. Our robots are equipped with most cutting-edge advances in AI that allows them to pick under any lighting conditions, including picking at night, which allows these fruits that are picked by our robot to have a higher shelf life. Now, because of this swarm robotics approach we have taken, our robots are one of the world's first automation platform that's capable of working in two completely different environments, a field and an indoor greenhouse with the exact same hardware. Not only that, these same robots are capable of going beyond just strawberry picking. Here you can see that very same robot that was picking strawberries, picking indoor tomatoes in a greenhouse. Now we have moved incredibly quickly for a hardware company. We have already conducted over 6 pilots with some of the largest berry growers in Canada and US, and we have raised over $1 million in non-dilutive capital through several research grants and winning competitions, including $500,000 prize we won last year at New York. And we already have over 20 growers on our wait list. And to launch the service commercially this year, we are raising $1 million that will allow us to expand our fleet and get new customers. And we are already fully subscribed in this round, but we are open to oversubscription. And I hope you will join us on this journey. Thank you.
Thank you. Awesome. Wow, the video looks really great. So now we have the last presenter of the day, Veritas Research, Ricardo. Yeah.
All right. Hi, everyone. I'm Ricardo, co-founder of Veritas Research. It's a fact. Microplastics are everywhere. And one of the biggest sources is the synthetic textiles that we wear and wash. They go straight through the wastewater treatment plants into our water sources, all of them. And there's really nothing effective or efficient to stop this until now. We've invented a unique technology that's able to capture and destroy these microplastics and microfibers. It does this by attaching to the wastewater discharge hose of the washing machine, collects all the outgoing microplastics and microfibers, and then through something called advanced oxidation, completely destroys them, at the same time regenerates the system for further use. This is unique patent pending technology that, unlike our competition, produces zero waste, zero chemicals, and most importantly, does not require cartridge replacements to purchase or recycle, and is extremely effective. So the time is now. Regulations are changing throughout North America and Europe that are requiring new washing machines to have these microfiber filters. This would not all be possible without our amazing and strong team that not only has the commitment, but the skills to make this a success. So we're looking for mission-aligned investors to help us close our pre-seed round and help us accelerate the commercialization of our VOX technology. Thank you.
Wow, thank you. So thank you everyone who's presenting today. Ricardo, if you can stop sharing your screen. Thanks so much. I'll just share my screen back up again. So for all the presenters, if you can just drop in the information, how we.
Oh, I think you're gonna mute.
Kookai, we can't hear you, I'm afraid.
Kookai, your mic doesn't work.
Your AirPods might have died.
I don't think she heard.
Hi, Kookai, we can't hear you. We'll send her a message. Stand by. In the meantime, hi everyone. My name's Angie. I am also on the VEF board. So while Kookai
Hi.
updates her, are you back?
So thank you
Okay,
so
good.
much. Oh my goodness. I thought it was like doing a really good.
Okay, good. Back to you then, if you're back. Awesome. Oop.
Can't hear you.
Let's give her one more moment here.
Yes, I should be back.
Yeah, we can hear you now.
Okay, perfect. Great. Sorry, start over. Just one more time. So thank you again to Outlining Pitches. Please drop in your information, website, LinkedIn, how we can reach out to you. That was all really great presentations there. So our panel discussion is next, but I'd like to just mention a special segment that we have, the reverse pitch roundtable networking. This is the first time that we're doing this at VEF events, and this will give the opportunity for the investors to actually pitch to you and tell you about their investment thesis. So each of the investors here will be introducing themselves and host a breakout room in the end. So please stay tuned to meet with the Venture Fund, Raven Indigenous Capital Partners, and Pender Ventures. All right, now let's start our panel on the next generation of company building and financing. I am pleased to introduce to you today's moderator, the amazing William Johnson, the founder of Vancouver Tech Journal. Over to you, William.
Hey, thanks a lot, Kookai. I think my AirPods might be having issues, but can everyone hear me right now?
Yes,
Wonderful.
all good.
All right, so all right, perfect. Let's get into it. Thanks so much, everyone, for joining VEF tonight. Super thrilled to be here. Great turnout. Love to see those lightning pitches. Those companies, always really impress me. And today we're going to jump into it right away, right? The next generation of company building and financing. We're going to look at, what does progress on that front look like? What does change look like? What does an entrepreneurship look like today? And to help us really do that, we've a rock star panel. Here they are. I'm going to announce our panelists. And then again, today, hopefully I can do as little talking as possible. We can hear from the experts we have here in the room. But really, to get us started, I'm going to call on each of the panelists, introduce yourself, your organization, what you do, really briefly. Don't share too many details about what you do, because we're going to dive into each one of your organizations throughout the chat. But let's get going. I also want to welcome Jill Urthy. Jill, how are you doing today?
I'm great. Great to be here. Great to be here with all of the audience members. Great to be inspired by the pitches and to be with colleagues and friends on this panel for this discussion. So I'm the new CEO of InBC, a $500 million strategic investment fund launched by the provincial government. So we're in the form of a new Crown Corporation with a triple bottom line mandate, and excited to get into that a bit more.
Awesome. Thanks so much, Jill. Good to see you. Next, I want to introduce Shelly Kuipers. Learned how to say that about a half an hour ago. Shelly, welcome. Good to see you today. Tell us a little bit about what you're doing at 51.
Thanks, Will. Shelly Kuipers, one of the co-founders of the 51. We are a financial feminist platform where we activate women-led capital for women-led companies, and that mandate is expanding with our new food and Agtech fund. So it's great to be here. I loved hearing the pitches, and thank you for inviting me.
Right on. And correct me if I'm wrong, but I believe Kookai is involved in that new Agtech fund.
Exactly.
Yeah, wonderful. Next, why don't I introduce Leah Nguyen from TELUS Pollinator Fund for Good. Leah, it's good to see you today.
Thanks, Will. It's actually pronounced Nguyen, for anyone who's curious on how to pronounce it properly in Vietnamese. I'll say it again, Nguyen. But if you say win, that's pretty close and close. And yeah, I mean, up till grade 4, I didn't know how to pronounce my own last name, so I don't take offense when other people don't know how to pronounce it either. So I'm an investment director with the TELUS Pollinator Fund. We officially launched in November 2020, and it's a $100 million commitment from TELUS to invest in the next generation of responsible businesses. So really companies that share our ethos around social capitalism and bringing profit and purpose together. So excited to be here today and chat with everyone.
That's incredible. Thanks a lot, Leah. I'm glad I know how to say it properly now, the last name. Last panelist, last definitely not least, I want to introduce Marlon Thompson from Future Capital. Marlon, how you doing?
Hey everyone, I'm good. Good to see you all. As you mentioned, my name is Marlon. I'm the founder and CEO of Future Capital, and we are an investment platform for new and emerging underrepresented investors.
Wonderful. Thanks a lot, Marlon. All right, let's get into it. So today we're talking about company building and financing. What does it look like? What does change look like? Something I heard a lot last year, over the last 2 years, was that we were seeing 10 years of change in 10 months. And for a lot of organizations and SaaS businesses, I think that was true. But it wasn't true for everyone working and building startups, right? And if you just look at the data, we can see that not everyone was getting access to capital. And the pandemic and growth and economics was not impacting everyone the same way. And if you just look at the data, since 2014, 10% of Canadian VC money has gone to women. If you look globally, some people say that number is only like 2.3%. If we look in Canada, visible minorities make up about 18% of partners at VC firms, right? So it's quite staggering. If you look at private equity, that number I think drops to 6%, right? So you have to ask yourself, is the economy reaching its true potential when the majority of people aren't necessarily participating in equal measures? And that's really the question that we're going to start with today, right? Which is, we all know there's an issue. It's not a new issue, but something is holding back change, even with people working on these challenges. And so that's where I want to start today. And perhaps Shelley, Marlon, you two again have founded organizations that are working on this access to capital for different marginalized communities. So I'm wondering if for the group today, you guys could sort of give us sort of the ground level, what you were hearing and what you were, seeing when it came to starting your organizations. Put us in the room in terms of, what were the challenges you were seeing. So Shelley, do you want to kick us off?
Sure. Yeah, I think it's interesting that you said, put us in the room. That's what we did when we launched the 51 in 2019. We had 75 people in my kitchen, and we put a founder in the room, a woman, and we said, don't pitch us, tell us your story. Why should we invest in you? And she successfully raised capital from the women in the room. And so it was a really cool way for us to launch the 51. We had a really strong response. People were like, where have you been? And then other people were like, I don't use the word feminist. This isn't for me. So we had a strong reaction. So we knew, okay, we're on something people care one way or the other. And we just started investing as a community. So it was really grassroots. We just started to do special purpose vehicles and start pooling our capital together. But what we heard from the community was create a fund so that we had a portfolio opportunity, and also to bring down the barriers as much as possible. And so we did. We created an innovative fund called Fund One. It's a very clever name, of course, because it was our first fund. And what we did was we created a 3-year subscription fund. So you could come in at $5,100 a year for 3 years, or $15,300 over 3 years, and become a member side by side with that. So as much as we could, we tried to break down the barriers around capital participation. And we knew that if we could activate women-led capital, and we have guys in our fund too, which is awesome, we're 90% women's capital. We knew we would invest in different things. We knew that we would invest in different things and different people and different innovation and different ventures than our male counterparts. And so we didn't see it as an anti, we saw it as an and we were just adding to the ecosystem.
That's fantastic. And again, I think the point there was that the women were more likely to invest in women-led companies, right? That was one of the key points there. And so Marlon, whenever you look at Future Capital, is it a similar idea in terms of what sort of spurred you to, well, actually, I'll let you describe Future Capital a bit more detail. I won't give it away, but tell us what you're doing with your organization and sort of how it fits with that.
Yeah, so, we definitely share, that one belief that a more diverse, cohort of investors is going to invest in a more diverse cohort of founders. But I think, going back to, the origins of Future Capital, I really didn't see myself at all in the industry. And so that was really the motivating factor. And, in this conversation, I wear a few different hats. So as a startup founder, I can tell you there's just a certain level of comfort and understanding that comes when there is diversity on the other side of the table, so to speak. But as an investor, I think there's, a really huge, effect that this kind of like diversification of the decision-making class will have on generational wealth and closing the larger, broader wealth gap that, there's so much reporting on. So I think there's so many different kind of problems that are wrapped up into the lack of representation and diversity within the space. And for us at Future Capital, we're really, really focused on, that group of outsiders who maybe don't fit the traditional kind of like background or aren't on that traditional pathway into venture, and enabling them with, first and foremost education, but secondly, the tools and connections and network that are required to really get your hands dirty within this space.
Mm-hmm. Yeah, absolutely. No, like you said, a diverse cohort of investors is more likely to essentially invest in a diverse cohort of founders. And the point you made, Paul, is that you didn't really see yourself in the industry. So I mean, if there's that type of work that's taking place, I wonder, Jill and Leah, and anyone can jump in here. Beyond a founder who's pitching a VC for money, there are lots of different types of entrepreneurs, and it's not all about getting that type of money. And we can get into more details there. Where else are I guess some of the barriers for women or marginalized communities in terms of seeking not necessarily venture funding, but like any type of funding, right? Or going to the bank. Like it's pretty a broad spectrum, right, in terms of different types of capital. Jill, I don't know if or Leah, I see your mic's on.
Yeah.
Can you speak to that a little bit?
Maybe I'll let Jill go first, just given her previous role at WBC. I feel like she's got a good perspective on that, and I can chime in from our perspective as well.
Right.
Sure. Yeah, I mean, I think it's really interesting because there are, as you mentioned, well, a ton of different types of capital. But I think what we're still seeing is it's still the decision making is still primarily is still not diverse, and the systems are still set up in a way that that creates some barriers for people. Yeah. So my previous role at WBC, which is a provincial nonprofit supporting women entrepreneurs with a loan fund, so as a development lender. One of the things was we found a lot of the women entrepreneurs were going to banks and well, if they were going to banks, actually, that's a key point, because often self-selecting out and not even having the conversation is often a thing. And that's the same in accessing angel or venture capital is not seeing themselves as that type of capital being a fit, not aligned with their growth goals. So that's a key barrier that we need to address and look at different types of capital that are potentially more collaborative, inclusive, and actually aligned with different growth pathways, because different entrepreneurs have different growth goals. Depends on sector, depends on so many different factors. So we need to really look at that and make sure those are aligned. So that's one thing, and it is great to see that they're being addressed. And I don't know if now's the time I can tell a little bit about what we're thinking about at NBC. Should I dive into that, or let Leah? Leah, do you want to jump in?
Yeah, I mean, I think I was going a slightly different angle. Is partially like, if you don't grow up in this world, you don't know that these are options for funding, right? Yeah. So if you don't know, then that self-selection process hits even harder. And so how do we help people understand what are the right options based on the type and size of their business and how they're looking to scale, and then who are the right partners for them? And I think, Marlon and Shelley, seeing people that reflects you on the cap table is important. And I think not just because, it's a feel-good thing, but that they're better able to understand the business opportunity, right? I was like using this example where we were evaluating a company that was focused on women's health, and all the other investors I was talking to were all men. And so they, they did all the research and they could figure things out. But I'm like, wait, I've actually needed a product like that in my life. So I can tell you firsthand what that user experience is. Or, talk to another company that was doing EdTech for pre-K, and I have a pre-K kid. And so it was funny when the entrepreneur said to me, like, you're one of the first parents I've talked to. And it was staggering, like how can investors make better decisions if they don't have the empathy or of lived experience of what the entrepreneurs have, right? And how are they able to then tap into those market opportunities if they don't know that those are opportunities, right? So that was really the lens that I was looking at it. But go ahead, Jill.
No, I think that's such a great point. I think the other thing that we've talked about as a group here too is even just demystifying some of the language, right? There are so many acronyms and difficult things that are thrown out there but really when you start to break them down and demystify it and apply it in realistic examples, it makes it much easier and reduces those barriers. So creating opportunities like this where we can have conversations and ask questions and just, clarify things and open the doors to bring more people in.
I want to just jump in and add one thing as well. I think that mirroring that we're talking about between like the founder community and the investor community, I think that expectation that diverse investors are going to invest into diverse entrepreneurs, I think that's still a thesis that needs to be proven out, because we're still really early into seeing diversity at the decision-making level. And like when I put my founder hat on again, it is still really, really competitive. even if you're, speaking to a Black VC or, LGBTQ plus, angel group, which, in those scenarios, like those should be really safe spaces for me. It's still really, really competitive, right? So I think that kind of, non-dilutive funding, the different kind of vehicles that aren't traditional VC or angel investing are really, really important in terms of closing the gap at the early stages for underrepresented founders.
Great point.
Yes, fantastic. I'm wondering if one of you can speak to, perhaps it's a misconception about like what an entrepreneur is, right? Like, is it like some 25-year-old who's like trying to build $1 billion company, right? Like, is that all entrepreneurship is these days? Or what have you seen with some of the companies that you're backing or investing in, or that you've worked with recently? What does it look like now? Because again, it's very different, right? It's not just tech startups raising $100 million. It's very different now. I don't know, Shelly, do you want to start? Like, tell us about the company that you've worked with, or someone that you found.
Yeah, I think it's a really good point. I think a big part of it goes back to our media, right? Media is only telling one part of the story. And that's why we really try to tell a different story every Friday. We host a different founder, a different investor every Friday on our Financial Feminist Friday, because you can be what you can see. You can't be what you can't see. And so I would say the entrepreneur community has largely been taught that you don't fit in. You don't fit into this box, and therefore you're not an entrepreneur. If you're not a super high growth, white, young founder from Silicon Valley, you can't access venture capital. I think women, and that's what, I'm here about, is talking about women-led innovation. We've been doing it for a very long time. There just isn't a platform to share these stories. And there's a great book called Invisible Women. And they even talk about how a lot of innovation that was actually driven by women was kind of erased. That innovation actually was no longer linked to women's innovation. And so I think we're doing the work. The platforms just aren't there to actually tell the stories, to be a role model. And therefore we can't access the funding. And so I think a big part of it is, again, is the invitation, right? I need to be invited to invest. I need to be invited to be an investor, and I need to be invited as an entrepreneur. And we're really trying to say everyone is invited, regardless if you're an investor or a founder today, or if you're aspiring, because we see this as a long-term journey. So it was a really rambling answer, but I think media plays a huge role in this.
Yeah, I was just going to add, in the spirit of this conversation too, even the term entrepreneur, right? It doesn't resonate with everybody. And when we look even at this province, and 98% of businesses are small, and so and depends on the culture too, right? So Indigenous founders, in some cases, that term entrepreneurship doesn't align. So it's maybe small business owner or community member, or there's just different terminology that we need to be aware of, I think, to be more inclusive as well.
Is there a way, Jill, to make, I guess, entrepreneurship more inclusive? Or is it not using that word? Is it, again, language obviously matters. But what else can be done, again, from that respect? Is it education about, company building, right? Like, what is it actually like? Or is it around expectation about what building a company is? I'm not sure. How do you
Can I
look
say
at
all
that?
of the above? As long as you don't say confidence building in women, because that's one thing that we hear again, and that's not the issue necessarily. So, but it is around, yeah, demystifying the language, making that more accessible, looking at, even things like applications for funding, whether it's in financial institutions or grant proposals, or certainly the pitch for in venture capital. That's not always comfortable for everybody. So it is looking at, at each step along the journey, really assessing that and being aware. And I certainly know as we're building in BC, we're really trying to be mindful of that at each step along our journey, to have an inclusive lens. And it's hard, right? Because there are so many different perspectives that you want to have at the table, and you can't necessarily do it all. But yeah, Leah.
Yeah, I think the other part, and it builds off what Shelley was saying, is having more visible success stories, right? Like you look at media and who are the folks that they hold up. There's a Steve Jobs documentary / biopic, Mark Zuckerberg one, when they spotlight women or people of color, they're not always in that same lens. So look at what's happening with Elizabeth Holmes, right? It's the what went wrong, not here's a success story. So how do we hold up success stories from diverse founders, not just the horror stories of what happens? Because I think it actually sets us all back further, because anytime they achieve some level of success, they're taken down, right? So we need to be able to find more ways to celebrate the successes, and they don't all have to be at that level and scale, but even like the smaller successes, to be able to show that progress is being made and help inspire others to feel safe.
And I'll add as well to everything that's already been said, which I agree with, that in venture in particular, what makes an entrepreneur is, the ability to keep running your business. So financing plays like an outsized role to everything else, in my opinion, in venture. Like if you need money to do this. So I think it's really important to underline the role that investors and funders play in supporting and, defining who gets to be an entrepreneur. It's like really, really important that we just acknowledge that.
And recognizing that generational wealth plays a big role in your ability to take some of those risks, right? So how do we create, new opportunities or mechanisms that enable, closing a little bit of that gap so that it's not as big of a risk for someone who doesn't have that same safety net to be able to participate in the same way.
Totally agree.
Practically speaking, if you were to create an organization in 2022, as some of you have done, well, not this year, but in the past few years, if you're building an organization from the ground up that's meant to tackle some of the challenges we've been talking about, what would you sort of bake into the DNA of these organizations in terms of ensuring that you are investing in marginalized communities and you don't have your blinders on to certain groups? Again, Leah, you've got the Pollinator Fund. Jill, you're at NBC. Marlon, you're at Future Capital. Shelley, everyone, you're at the 51. So you're all doing different things, but what would you describe as being sort of core to how your organizations are moving the needle here? And again, Jill, you're first on my screen, so why don't you sort of talk about what you're doing at NBC, and we can also plug our conversation tomorrow.
Yeah, exactly. Well, so some of the things we're doing and being very mindful that we don't know it all, right? I think that's the first thing, is to be listening. So, over 250 consultations have already taken place with different stakeholders with particular focus on underrepresented groups. So whether that's Indigenous communities or Black entrepreneurs or women or many other communities, to really have a better understanding so that we have had that lens. When we look at building our team, when we look at the suppliers we're engaging, when we look at, our board, we're considering all of those things. And then of course, as we start to invest, we're going to be considering those factors. We're a triple bottom line fund. So that means, we're looking at people, which we're measuring as, meaningful job creation, but also diversity, equity, inclusion embedded through that. We're looking at reconciliation, as I said, across the board. And then we're looking, it is relevant to this conversation because I think planet and climate is highly topical. So we're going to be factoring that in too, and then profit as well. So I think the key is we're really trying to be mindful as we're building, and be very intentional in having an inclusive approach.
Absolutely. Thanks, Jill. And Leah, again, I don't know if everyone here has read about the work that the Pollinator Fund has done over the past year. I think you guys are maybe a year and 3 months into, I think, that fund. And there's, in my opinion, some remarkable stats about some of the companies that you guys have backed so far. So what did that look like from TELUS's perspective? How did you ensure that? And perhaps, this is your opportunity to share some of your success, I guess.
Yeah, for sure. Thanks, Will. So we officially launched in November 2020, and last year, a few months ago, we published our first year impact report. And I think for us, as a value for our organization as a whole, it's ensuring that we incorporate equity, diversity, and inclusion in everything we do. And I think it was very apparent in terms of how we built the fund, but also how we, have constructed our portfolio. So in our first 10 investments, 4 out of 10 or 40% were led by women, and 50% were led by Indigenous or racialized people, right? And so comparing to the statistics you mentioned earlier, Will, we're industry leading. If you look at the team, we're also equally reflective in terms of diverse experiences and backgrounds, right? And I think it goes to one, that being a core component of what we as an organization hold dear, but also how do we design our processes to enable that. So as part of our recruiting process, not just having coffee chats with people who are already connected to us in our network. One of the things we did was held basically open office hours and broadcasted broadly, where people could anonymously dial into a call, learn about the fund and ask questions. Because we recognize not everyone's going to have, a first or second degree LinkedIn connection to us. And we want to make sure that we're enabling more folks to participate. And what was funny, one of the downfalls of doing it just as a voice call is that you can't see people. And so during the Q&A portion of it, we're getting a bunch of questions on the second call. And I was noticing a pattern that was predominantly men asking questions. So I paused and before someone could ask a follow-up and just said hey, are there any women on the call? And sure enough, you started hearing women participating as part of that process, right? And so it's something to make sure that, as we're going through the process, building in, mechanisms and ways to check for that. And because we did it blindly, i.e. we couldn't see people, that was just something we had to consider. And then, through the screening process, taking best practices around how do you ensure you minimize bias, right? So ensuring you're asking the same consistent questions in the same order of everyone so that you're not, cherry picking how you want to navigate the flow, but that was one other element. And then when it came to portfolio construction, because our team was such a diverse team, we were able to tap into different networks to, surface different opportunities. But I think, coming across entrepreneurs who more than once have said hey, it's refreshing to talk to a woman investor or someone who understands the problem that we're trying to solve, I think really validates that our approach has helped us to be able to continue to do this. And then I think the final thing is really ensuring that there's transparency. So the measurability is important. So, as mentioned, we are an impact fund. So impact measurement is core to what we do in terms of who we invest in, but also what we share with the world, right? And so, our one-year impact report really highlights the stories of all the different companies we've invested in. And I think, by having that transparency and measuring allows us to prove, we're living our values. We're not just saying that diversity is important to us. We're actually showing up with the receipts.
Yeah, it's fantastic. Again, Marlon, Shell, you don't have to answer the question again. It's about building an organization from the ground up. But Marlon, I do have a question for you, and it's about take us through the experience of someone who actually joins Future Capital, right? Is there someone you can tell us about that's actually gone through a cohort and is now making investments, right? I think that'd be really interesting for people to hear.
Oh yeah, for sure. So, I mean, just quickly, I'll address the last question. And, to be really honest, I think for us, it was always important to stay really focused on investors and that side of the spectrum, and not try to tackle both problems at the same time. Not that it's not important to us to see that diversity on the founder side, but we really want to focus on, offering up and enabling this new group of investors to engage with startup investing as an asset class. So for us, that's the focus. And yeah, I mean, the journey of a member of our network, we try to really create these low touch but high impact learning experiences. So we try to get in, get out of the kind of virtual classroom and then get to work and partner with everybody that's in our network. The truth is, you know, there are so many different avenues and pathways and routes to startup investing that one person can take, but I'll talk to you about the most common one. The most common one would be someone that, you know, goes through our program, which is essentially a crash course in startup investing, and then meets, you know, members of the broader ecosystem in that program, including members of our team. And on the other side of the program, they have a clear trajectory for themselves. So they know what the next step is. And we really just try to, you know, embrace and enable them on that trajectory. So some folks come out and start investing right away. Some of them, you know, invest in the companies that we profile in the session. Some of them will come out, start a syndicate of their own. That's happened multiple times. And some will go on and invest in, you know, funds like the 51. There have been multiple alumni that I know have gone over and worked with Shelley. So, and we want to see, you know, as many iterations of that as possible. And this is where I think personally, there's like this huge transformation happening in venture right now. And there's a ton of white space to grow into. And we want to grow into that white space with, you know, with our network. So not limiting it to just kind of one pathway.
Well, yeah, I think, well, I was going to say, that's one of the key points, that you're not limiting it to one pathway, and investing looks different to different people and groups. And I think that's the point, right? That there isn't just one way. There are some questions. There's one from Pauline in camera, who I'm sure you all know. I'm curious about everyone's thoughts on the inherent structure behind venture capital / equity itself and how it perpetuates inequitable power dynamics. Thoughts on solutions, implications around who self-selects in, not because of this, and evolution needed. Does anyone want to tackle that?
I could take a first crack, and then colleagues on the panel. But I think it is interesting, and there's a huge issue there. I mean, we know the traditional sort of venture math is, right, you invest in 10 companies, and 4 or 5 are we maybe not gonna have much progress. 1 or 2 hopefully will hit it big with a 10x return, and the others will, like, maybe you'll get your money back, you know, something like that. That is in my opinion, it's not a very sustainable formula. And so I think it is really thinking about that and looking at, you know, at NBC we're really looking at patient capital, right? Some of the sectors that we're going to be investing in could be 10 to 15 years before a return is realized, and recognizing that and going back to the aligning with growth paths. So I think we do need to think about it. I mean, personally, I would rather invest in more companies that are growing at a more sustainable pace over a period of time and accessing capital as they grow. So I think it is, just to break some of that down, is just thinking about it in different ways. And that is becoming more common. We're seeing more models like that that are proving themselves. And actually, in some cases, returns are incredibly strong. So I think it's just, we do have to rethink that. That fits for some business models, but it doesn't for a lot. So we really need to rethink that. And that's how we're thinking a little bit more about things at NBC.
I'm nodding my head furiously, Joe. I co-sign with all of that. And I would just say, I think the more we engage groups and, you know, communities that have been left out, the more, the better we're going to understand other ways of doing this. I look at like Raven Capital as a really shining example of taking a different approach to venture capital, like every step of the way. And yeah, this question is such a good question. It's something that I wake up honestly thinking about all the time. So thanks for asking it.
Yeah, and I'll just pile on. I completely agree. Like, that's the role of all of us as, you know, maybe emerging fund leaders, or, you know, going into the, you know, the established structures and innovating there. But I think that's our role. We're supposed to innovate these models to be more equitable, and look at the investments that we're making in founders and entrepreneurs as a partnership, and not something that's hierarchical. So I think we're all trying to challenge that system, and there's going to be many more of us that follow behind us doing this exact same thing. So it's a really exciting time, because I think all of these lines are going to be blurred around who's doing what in the sector.
Yeah, and +1 for me on everything that was commented on. And I think the other thing you're starting to see is beyond ESG being incorporated in more lenses for disclosures and reporting, people are starting to really think about, well, how do you incorporate more impact assessments in what you do, right? Because ESG is really more around screening for risk versus impact is intentionally creating better outcomes, right? And with that, it goes to the fundamentals of the business and the mission and the vision of what they're trying to build and how sustainable that is, right? And I think, you know, I remember reading a few articles and really talking about the convergence of how impact investing is going to start becoming more mainstream, where it's not just this feel-good thing that maybe you'll get your return on capital back, but it's really starting to see, one, demand from people, investors and consumers alike in terms of voting with your dollars, right? But two, companies and founders also feeling this and wanting to have mission-aligned investors around the table with them. Like the times that I've been on a diligence call with an entrepreneur or founder, and they're asking me how I measure impact and what I care about, you know, gives me a lot of hope, because it sounds like it, you know, they care about the same things, right? And that they're really thoughtful in terms of how they're building their business.
Yeah, agreed. I was just going to add one quick comment too, just around transparency and accountability and collaboration. And the people that are building, and I look at the people around this panel, but also in the room that are trying to do things differently, there is a high level of collaboration happening between those groups. There's sharing of tools and resources, which is so powerful, which will help us move forward even faster and make change. And then I look at even BDC just released a new DEI tool, and they're sharing it, right? It's open source. So there's things now where we can standardize some of these things. So there's transparency too, and we can hold each other accountable. But I just think that that's really going to accelerate this shift. So I'm an optimist.
Just being honest about where we are right now too, right?
Yeah.
So the data to drive that transparency so that we can drive the change that we want to see, right?
100%.
Couple more questions that I see in the chat, and then I've got some as well. And I think we have 7 minutes, so we'll see if we can get through them. I want to flip it over to what is perhaps some practical advice we can be sharing for founders in terms of looking for, again, it could be just looking for non-dilutive funding, but also it's, you know, looking for the right partner in terms of maybe a venture capitalist or whatever type of investor. I don't know, what kind of questions should they be asking? Where should they be looking? How do they reach out to, you know, an investor they see on LinkedIn? Are there any really practical things that you're talking to entrepreneurs, if we can say that word, about if you're talking to, you know, people building businesses about, right? Yeah, just practically speaking, like Leah, like let's say the last investment, you know, TELUS made, like, where did that deal flow come from?
I mean, we've sourced everywhere from referrals to Twitter. So, you know, we have a very wide swath. But I think for us, it's making it easy for people to access. So on our website, there's a form anybody can fill in to submit their pitches. And then, you know, having other mechanisms where, you know, it could be a referral, it could be honestly a Twitter DM where we'll try to take a pitch. But I think for the entrepreneurs, I think it's being clear as what is it you're looking for? Right? Because it's not just about the capital when you're getting investors on your cap table, right? And one, do you need investors or do you need non-dilutive funding? But two, if you're looking for investors, who are the investors that you're looking for, and what's the value add you're looking for from them? Because not all investors are created equal. And so you want to make sure that, you know, you do the research to figure out like who are the ones that, you know, offer the other skills or connections or relationships that you're looking for, or if they invest in that same sector, because and then curating your approach to target them, as opposed to trying to spray and pray every single investor that you see on TechCrunch or BetaKit, because I think it'll increase your odds of success, and practice your pitch, right? Because I think, you know, being comfortable with what pitching feels like can be quite a natural, right? And so, you know, there's a lot of great groups and resources out there that have, and Twitter's a great place to source a lot of like initial thoughts. There's a lot of differing opinions on them, but there's some great threads that are out there as well that can give you a sense of like, what is it that people are looking for? What's the vernacular that they're using, and get a sense like, you know, what are the personalities that are involved, right? Before you decide to go ahead. And then, you know, assuming you're successful finding investors, make sure you diligence your investors and make sure they're who you want to be in this, because, you know, even though venture investing is meant to generate returns, you know, they're looking at least a 4 to 10-year relationship with you, right? That's a long time. So you want to make sure that the people you're bringing on board are people that you want to be in relationship with for that period of time.
Yeah, it's great. And I'm not sure if you guys can see the comment. Last question from Katrina in the chat, but it's an interesting one. VCs often act as a gatekeeper, and that can decide the fate of a company entrepreneur. Without a warm intro, it's hard to get that first meeting. That's often not a meritocracy. Advice for entrepreneurs on getting the idea heard versus just quotation marks who you know. So interesting comment, and again, I think there's a bit of a question there. If anyone wants to jump in. Oh, and then sorry, I was reading Jill's. Oh, go ahead, Marlon.
I just want to add just that because I think that's a really good question, and like as a founder who is always raising capital in the background, I'd say the best thing, like just really pragmatic advice, would be the best, like the first and best thing that you should do is really educate yourself on the process of fundraising, like how it's actually done. There's a really good book by Ryan Breslow called Fundraising. It's like you can read it in an hour, really tactical, that just breaks it down into really simple steps. Once you've done that, I think it's really important to find advisors and supporters that can actually help steer you through the journey. You're not going to figure it out on your own, and you're not going to figure it out by trial and error for the most part. So having someone that's been through that process, behind you, supporting you, I think just makes an incredible difference.
Absolutely. And actually, it's funny, Marlon, you touched on something that I wanted to ask, which was just practically speaking, like resources, right? So you mentioned a book. If everyone here had to point, an entrepreneur to a book or a website or a newsletter or a podcast, anything like that, or your guys' websites, I'm just curious, where would you direct them in terms of just learning about financing, raising, anything like that? You can think on it now, or feel free to just drop it into the chat. Oh, go ahead, Jill.
Yeah, well, I don't have a favorite podcast at the moment, although I think those are great, but I was just going to say each other as well, right? Like, you don't have to do it alone. So also talk to each other. Like a number of the entrepreneurs who are pitching today, like it's okay to share your journey and reach out, but then also reach out to entrepreneurs who've been there, done that, and don't be shy about that, right? Most entrepreneurs are happy to provide some insight into what their experience was and to help guide. So don't be afraid to ask.
Great. Actually, there's a question from Hillary that I missed in the chat. How do you meaningfully measure increased DEI as ventures scale, especially when it's happening so quickly? Yeah, it's an interesting question. Does anyone want to tackle that?
I think there's some really cool tools out there now, like Diversio, a woman-led platform for tracking DEI across ventures, portfolios, capital. In fact, they are powering the CBCA private equity human capital study that's being released on Thursday morning. So I think that there's ways now to scale that through different types of platforms. Hillary, check them out. It's a really cool platform.
Yeah, it's fantastic. So anyone else who wants to address that one? If not, I think there's another question, I think, for you, Jill, just on the types of businesses that NBC will be investing in. I'm not sure if you saw that one.
Yeah, so we're also a startup in a way, right? we're building, and we're just finalizing our investment policy statement. But we do what our goal is to be that patient additive inclusive capital. So we see a gap right now between seed and Series A. So we'll be looking to probably start doing some investment in that space, whether into funds, and that would be both emerging funds as well as existing funds or established funds. But we eventually will be right along the growth continuum, but filling gaps, right? And being that additive capital and being very aware of the private sector and other sources of capital that exist. So we'll be a complementer. So stay tuned. More details coming soon.
That's fantastic. Thanks, Jill. And I think I'm at the deadline, but no one has messaged me to tell us to stop, but we'll just try to stay on time anyway. I think we've heard today that, the face of entrepreneurship and what company building looks like is changing a lot and rapidly. And it looks like we'll need new tools and new approaches to continue to move the dial on those fronts. And, I think everyone you're listening is fortunate that we've got people like you sort of leading the charge. So I want to thank you, Jill. Thanks, Leah. Thanks, Marlon. Thanks, Shelley. I think I'm throwing it back to Kookai.
Yes,
There she
me.
is.
Thank
But
you
just
so
thanks
much.
to our panelists.
Yes, thank you to all the panelists. Thank you, William. Honestly, if there's one thing I took away from this, discussion is that the equitable future that we want to see has already started today. So I hope this is a signal for all entrepreneurs, investors alike, that we're trying to create something different here, and that there's paths for everyone forward. So now I'm going to reshare my screen before everyone drops off and leave me here. We still have exciting session, coming up still. Sorry, one second. Right. All right, so we will just pop in a quick Zoom survey. It will just be popping up to you. So please take a minute to quickly rate this event. Your feedback will really help us improve the future events. And speaking of future events, in April, coming up, we will be hosting hopefully a hybrid event where we can meet in person as well. Also would have the option to broadcast it to those who want to dial in from wherever you are. It's going to be about climate tech. So if 2020 or 2021 was about COVID, another thing, it's also the climate tech as well. So this should be a really exciting event. So please save the date, mark in your calendar. So and hopefully we'll be able to see each other in person. All right, so now I am so excited to introduce you to our reverse pitch roundtable of investors. Each investor will host a Zoom breakout room, giving you the opportunity to connect and learn about their investment thesis. And to start, I'm going to ask our investors to introduce themselves. So first off, Hillary from the Venture Fund. Hi, Hillary.
Hello. It's great to follow that panel and many colleagues and past coworkers. So it's to be here on behalf of the Venture Fund. I will say that I am a longtime SheEO activator, so got involved into the SheEO community about 5 years ago when it first launched. And what we really quickly saw was a lot of the challenges that you heard identified here. So we started looking at a syndicate model similar to the 51 and shifted towards a managed pool fund, which is what the Venture Fund represents. We are a venture first fund that is providing next level capital to grow SheEO's women and non-binary founders who are having an impact. So come join us for a conversation. What does it look like? How are we making those decisions? And a lot of the things that we heard Paulina share and some of the questions around systems and how do you embed that in a different form of investor-venture relationship.
Thank you so much, Hillary. So next up, Paul from Raven Indigenous Capital Partners.
Hi, everyone. Also really excited to follow on that panel. That was awesome. I'm just going to share a word in my traditional language, which is carrier. Deneza Tsekeza Daicho, Paul Sadney, Mark Spa, Marilyn Slu, Nasl Deachatian, Sophie Keratlo Alu, Sagana Lexilu, in Jan Yankak Dene Keoch. So my name is Paul Lessert. I'm a member of the Carrier First Nation in North Central BC, and I'm joining today from the traditional territory of the Lekwungen speaking peoples, which is the Songhees and Esquimalt First Nations adjacent to Victoria. I'm a managing partner with Raven Indigenous Capital Partners, and we're an Indigenous-led and Indigenous-owned social finance intermediary with a mission of improving the well-being of Indigenous peoples all over Turtle Island. Our Raven Impact Fund invests in early and growth stage Indigenous companies that are helping to build a high impact, sustainable Indigenous economy in both Canada and the United States. I always call it an economy in the image of our culture, which I think is an important part of our pathway forward as a society. And our equity investments are in the range of 250,000 to 2.5 million, and really happy to be here.
Wow, thank you so much, Paul. So next up, Kendall from Pender Ventures.
Hi, everyone. This has been a fantastic panel, and like Paul and Hillary, I am very excited to join the conversation. I'm a principal at Pender Ventures, We're part of a diversified asset management group that has 2 billion in AUM across venture capital all the way through to the public markets. And as it relates to the conversation today, we're a woman-led GP, a very diverse team, and are proud of our statistics right now in our first fund, which is 50% representation across underrepresented founders. Please come and talk anything from the things that you heard on the panel today to how to improve the ecosystem as a whole, to any questions you have as an entrepreneur or founder. I should say that as sort of what we do invest in early growth. That's usually post-product market fit companies in specifically software technologies and health.
Awesome. Thank you so much. So now we're going to open the breakout rooms, and they will be open for the next 25 minutes. You can stay in one room for the full 25